Paul Teitelbaum, shares of Castlight Health shot up 150% on its first day of trading. They make software to help reduce healthcare costs. It still has a multi-billion-dollar valuation. Is it worth it?
I really don't think it is worth it. I think there's going to continue to be some cooling off there. As you mentioned, the company, after pricing at $16 a share, shot up to close to $42 a share on the first day of trading. I believe it's trading around $22 a share right now, so that's close to a little more than half of what it peaked at.
What is it about Obamacare that makes stocks like Castlight so hot?
Well, so Obamacare and changes in the healthcare system are driving several different dynamics. Cost savings, the need, the trend toward putting more of the burden of costs on patients, as well as on employers. And so in the struggle to kind of share in those costs and figure out who's going to pay for what, and employers as well as patients paying for a bigger chunk of the healthcare costs, it's very important for employees to be able to have the tools to understand what costs are going to be, what the costs of going to a hospital, getting a procedure done, going to a physician's office are going to be.
So are we going to see lots of big players take out the likes of Castlight once those shooting star stocks cool off a little bit? Who are those big players going to be that are doing the buying, and who's going to get bought?
Yeah, so I think we are going to see a number of companies that are going to be taken out over the next couple of years. Is it going to happen after they do an IPO like Castlight did? Depends on what valuations they ultimately come down to and how reasonable those valuations are. If Castlight's revenues and earnings were to grow very, very rapidly and it earns its way into its valuation very quickly, we'll have to see how many buyers there will really be for that company. Probably, I would say a few buyers potentially, but not as many as if it continues to cool off. The other thing I'd say is that we are going to see some important buyers in the healthcare space continue to be active. Premier is one, and several other companies. So mentioned. Yeah, go ahead.
And then finally, are individual investors able to get in on this? Can they kind of game the system and see who's going to get taken out?
It's going to be hard for the investors to get in on, say, acquisitions of made by companies like Premier or Accenture, the advisory board company Cognizant, which may be buying a number of for example, privately held companies. So they're not going to be able to get in on that. The way investors are going to have to play this market is publicly traded pure play stocks. If they're investors in private equity firms that have invested in a number of these companies, and there are actually over 125 privately held healthcare IT companies in the portfolios of the top 40 healthcare-focused private equity and VC funds. So someone who's an investor in private equity firms may get some exposure to that. But that's one of the reasons that Castlight priced so high. Because if you think about it, with Obamacare driving the trends that we talked about before, there aren't that many ways that investors can play the public market. There are somewhere between half a dozen and a dozen publicly traded pure play companies, and that's it.
All right, so it's not that easy to find the winners and the losers.
No,
Thanks a lot, Paul.
Thanks very much.
Thank you for watching The Street.